Welcome back. Today we have some great information for me to share. This is a very high level, it pretty much summarize a lot of key housing data that people has been wanting to get. So without further ado, let's go ahead and dive in. And today's headline is why is the home prices keep rising even with higher mortgage rates. Okay, welcome back. If you are about to end of this video, if you receive any value whatsoever, please like and subscribe to my YouTube channel and also put your email into my website so you can become a free subscriber to our real estate investment network where you receive free newsletters every single morning into your email inbox. All right. So yeah, this is a really good information. It just can summarize and recap everything about the reality of the housing market, and it just dispel any myths, MIT, MYTHS versus reality. And so this information based on pure historical data, is the most credible, most reliable, as opposed to very much unreliable data that we've been getting brainwashed with, especially the social media, especially the YouTube videos, bros and doom porns out there keep on scaring people about the housing market. So without further ado, let's dive in. This article is written by Mr. Logan Morashami from the Housing Wire. So he's a very credible data real estate scientist, if you will. You cannot dispute historical data. All right. So without further ado, let's dive in. I love this information, and hopefully you guys do as well. So this is the blueprint of having a true understanding of why the housing market has been the way it is in the past few years, and compare it from a historical perspective. Then you will become a very good informed and educated housing market consumer. Uh, before you watch this video. All right, so let's dive in. So, why are home prices still rising even as mortgage rates have gone higher? Wow, that's a $1 million question, isn't it? A number of people, I wonder who they are, predicted that home prices would experience a steep drop as mortgage rates rose. But that's not what has happened. Why? Here it is. This is not a new idea, okay? Mr. Logan Marashami has been dealing with people predicting a housing crash every year since 2012, right at the aftermath of the real estate housing crash back in 2008, 2009. So this doom porn, you see right here, those housing crash bros out there, yep, they are misleading people out there. Be careful out there in a wild world of YouTube videos. The doom porn crash bros is trendy in America and is usually done by people who hate the Federal Reserve. It's more than that. Doom porn people, they want more subscribers, they want clicks, they want views to us so they can monetize their channel. Okay. They don't provide real data. They manipulate data, scare people into a doom and gloom and housing crash every single year. They talk all negative news all the time to monetize their profits. They need to get a real job. Okay. Those house bros, crash bros. Wow. They've been scaring people into doing nothing. Do you understand? They're scaring consumers and potential home buyers into doing nothing because the people are paralyzed by this fear porn out there. Very brainwashing, very manipulating, very deprogramming, based on my opinion. But those people, those doom porn providers out there, they, you know, they manipulate everything. So the data, Mr. Logan Marshall will use data to explain why, even this year, 2024, third calendar year of the lowest home sales ever, right? You have to distinguish between the word sale and the word housing crash. The lowest home sales ever, which is lack of inventory. Okay. The national home prices have not crashed. Why? Let's go over the high level. Here are the reasons given why home prices would supposedly crash over the past 13 years. Every single year from 2012, here are the headlines for every single year of all those doom and gloom. The sky is falling. The world's coming to an end in the housing market. The headline for 2012 by these doomers out there, they say shadow inventory. 2013, higher mortgage rates. 2014, the OE ending in October, quantitative easing ending in October. 2015, manufacturing recession. 2016, home prices got back to the bubble high. 2017, no good reason. 2018, 5% mortgage rates. Start of the bubble crash for sure. 2019, home price growth was cooling off. 2020, COVID-19 crash out of the market. The world economy is frozen. The whole housing market is frozen. COVID-19 started 2020. The housing will crash. Oh, it did not happen. The reverse was true. 2021, mortgage forbearance. 2022, 7% mortgage rate. Oh, wow. The war is coming to an end. 2023, historically low housing demand. 2024, this year, higher mortgage rates, higher inventory, sexless men. Mr. Logan, he have a way with word that means he feels that men are not producing enough babies, enough children to produce the demand to meet the supply of housing inventory. It's a demographic kind of situation. Okay, millennials not getting married at too late in life. They're creating a new household like the previous generation, in my estimation. Silver tsunami, yeah, baby boomers, they're dying off. They're gonna leave a lot of supply over inventory on the housing market. No, silver baby boomers or have a very long life expectancy. They're not gonna die off on at one time, create a lot of supply of inventory into the housing market. No, that's not happening. Credit card debt, yeah. Well, take your pick. It's all rookie ball. Anyway, all these negative headlines for the past 10 years, housing crash, it did not happen. Ladies and gentlemen, these are not housing crash experts. These people on the mainstream media, on the YouTube videos, the doomers out there, the housing crash bros, they are manipulating everything. They are not real data analysts. You know how to determine what's their background. There's a rule you need to evaluate. Okay, that's your to research into these doomers out there. Don't listen to anyone on the internet unless they show their name, their face. They have put out a written 2024 price forecast. 5 years of home price forecasting and a working model. You have to ask these doomers out there, these crash bros out there, that can they ask them to produce a written 2024 price forecast, 5 years of a home price forecasting, and a working model. Okay, so that's a question you have to ask them before you believe into their doom and gloom uh, 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 negative programming. Okay, so they can get some clicks and whatever, monetize their channel. So why haven't home prices crashed with the high mortgage rates? Let's go back to this headline for our video presentation today. If this history is our guide, it is rare for home price to fall in general since 1942. We're talking 80 something years. Home prices have not fell until you take the housing crash of 2008. That's the only exception. Okay. Only one other than the housing crash of 2008 and 2009, there's only one other year that housing market in any given year was negative, and that was 1990. That was like 35 years ago, and that was only 1% decline. So during this pandemic of 2020, 21, 2022, 2023, 2024, housing prices have gone up in value from a nationwide perspective. Okay. And here are the proof. Here are the historical data. U.S. housing price returns since 1942. Take a look at it on your own. Only time there was a crash was 2008, 2009 during the GFC, global financial crisis. The housing market crashed. Okay. And of course, 1990, there's a 1% reduction. Every other year over year on a historical basis, the housing market have increased in value for the past 80 years. Isn't this amazing data? This is true historical data. So when people give you some current 2 or 3 years of housing data, you always have to ask yourself, compare to what? You have to compare the last 1, 2, 3, 4 years of housing market metrics compare it to what? Compare to the historical data. And I'm showing you a lot of it on a historical data as I'm presenting now. All right? Isn't that great information you're getting right now? So when you ask the housing crash bros and the doomers out there why their home price forecasts don't work, they usually say, we should adjust home prices to inflation, gold prices, or some other silly historical reference that doesn't apply to modern day economics. This group of crash bros is simply a cult, and their accounts have been wrong every single year, the past 30 years. Housing crash in 2011, housing crash in 2012, housing crash all the way up in 2024. It hasn't happened. Come on. To get a real price crash, we would need to see a surge of housing inventory and distressed sellers. Inventory is growing, but it has been a calm, healthy rise in 2024, not a flood of homes coming into the national housing market. All right? The National Association of Realtors, NAR, existing home sales shows sales drop only 10% from August to a seasonally adjusted annual rate of 3.84 million in September. Year-over-year sales down 3.5%. So home sales has been essentially stuck at a $4 million unit pace. Okay? But again, according to NAR chief economist Lawrence Yun, there are more inventories choices for consumers. Okay? Lower mortgage rates than a year ago and continued job additions to the economy. Perhaps some consumers are hesitating about moving forward with a major expenditure like purchasing a home before the upcoming election. Another excuse? Mr. Logan Marshami disagreed with Young is this. Logan Marshami said, we have more inventory because demand has been softer and we have more new listings this year compared to last. So if the mortgage rates were below 5.7, between 6.25% and 5.75%, Logan said, we would have been growing home sales regardless of the inventory data. So inventory is growing and home price growth is cooling down from a savagely unhealthy, he loved this word, savagely unhealthy housing market of 2021 and 2022, right? But not enough to crash home prices nationally, all right? So as you can see, Below are the charts for today's report. You have to note median sales price data is seasonal. Many people will try to trick you by saying whole prices are declining in the second half of the year. But these are just normal seasonal price declines we see every single year for the past 80 to 100 years. This is the chart you see. So again, the house crash bros, the doomers, the doom porn, they always use this chart to manipulate, saying, oh, toward the end of the year, home prices have decreased. No, this is a seasonally sales and median price adjustments, corrections every year. The beginning of the year, yes, price rising because of spring buying season, whatever. And then toward the last quarter of every year, seasonally adjusted home prices decrease. There's nothing more to it than that. Here's our existing home sales right here. Okay, throughout the year, median sales price goes up and down on a seasonally adjusted level every single year. Nothing to trigger any kind of negativity. Months of supply, yes, months of supply at the beginning, like a little bit higher than 3 months supply of inventory. Now we're up until 4.5 months of supply. By the way, 4 to 6 months supply typically is a balanced market, right? Whereas anything less than 4 months of supply of inventory is a seller's market. And anything more than 6 months of supply of inventory is buyer's market. We've been having a really strong seller's market during the pandemic. Right now is a healthy balanced market of 4 to 6 months nationwide, although the local markets are different, obviously. Real estate is local. So look at your local market where you live in to determine what is your unique situation within your local neighborhood. All right. So anyway, so using the NRA data, National Association of Realtors, the normal amount of active inventory since 1982, which is 40 something years, has been between 2 and 2.5 million. However, right before the housing crash in 2008, active inventory spiked to 4 million. Wow. Okay. Now today, it is only 1.39 million. Okay. So right now is a housing market healthy balance with only 1.39 million, which is, we have seen housing sales crash in the past 2 years, the lowest sales in the past 30 years. That's what's happening. Furthermore, the foreclosure levels are a historical low. Okay? You look at the foreclosure and new bankruptcy are still below pre-pandemic level. Look at this. Look over here. First quarter 2024. Look how low. Less than 2% of people are in mortgage delinquencies and bankruptcy as well. At the peak of the housing crash, 2008, yes, we have a very high level of foreclosure and the aftermath of the 2008 housing crash back in then, of course, then 2009, 2010, 2011, you have a very high level of distress during that time. But ever since that time, things have drastically reduced in terms of foreclosure and distress. Right now is at a historical low levels. Do you understand? No major forced selling happening. Why? Why? Because right now we are seeing a mere 30,000 to 90,000 of weekly sales data for the last 5 years. Compared to the peak, compared to the immediate aftermath of the housing crash of 2008, a few years afterwards, we were seeing 250 to 400,000 homes per week are being sold. You see the amazing difference? 30 to 90,000 today versus 250 to 400,000. We're talking about 10x, 10x, right? So there are no excess inventory today compared to 14 years ago during the housing crash, right? Anyway, another reason why there are no stress out there, very little stress, if at all, people have tons of equity this time around, right? Today, only less than 2%, 1.7%, less than 2% of people's mortgages are underwater. That means the loan balance is higher than the market value of their homes. Isn't it amazing? right? 40% of all the homeowners have no mortgage at all, free and clear. Okay, 40% of homes in America don't even have a mortgage. Look at the massive equity those people have. Okay, and then look at the loan to value ratio for US mortgages. Okay, back in 11 years ago, 2013, there was 70% loan to value. That means people have around 30% equity during 13 years ago. Now, because of rising home prices consistently over the past 13 years and people paying down the loans and everything else, look at here. Look at the loan to value of less than 50%. That means if someone have a medium price home with, let's say, 400,000, which is pretty much the case today, 400, the average people have a loan around 200,000, right? Half of the market value of the home. So $400,000 median price of a home and a loan balance of 200,000, they have $200,000 equity on the average of a median price of a home. Is different and with different local markets, of course. In California and high cost areas in the country, people have massive amount of equity because the value of their homes are so high. So you see, every single year consistently, people have more equity in their homes. What's stress? There's no stress, right? All right. So again, 1.7% of homes are underwater, less than 2%. That's nothing. Okay. All right. So furthermore, as we are about to conclude, again, there's only one period back in 2008 where national home prices crash. Just that's it. 80-year history of data. Some people believe rising mortgage rates over the last 2 years would automatically mean home prices would crash. History disagrees with this assertion. The data I just show you, for decades, we have periods in history where we have both rising mortgage rates and inventory without home prices crashing. Today's existing home sales report, home sales have declined, but they're not crashing. Home sales decline because there's a lack of inventory and demand is not as high due to elevated mortgage rates. So in order to see distress, in order to see housing crash, you need a terrible economy. You need a major distress sellers. And a lot of people they have a lock-in effect, right? They lock in the historically low mortgage of whatever, 3 to 4%. They're not going to sell their home to move up to buy a home at a 7% mortgage, essentially double their payments. They're not. So they're sitting pretty. They have a lock-in effect. All right. Because of that, the sellers they don't need to sell. They're sitting pretty. They have so much equity in their home. And also, again, in order to have a housing crash and in order to have a stressful seller situation, you need a terrible economy, major distress seller, and you could get no help from the government in assisting American citizens, which means you need to have a repeat of the Great Recession of 2008. The data I just showed you so far, that's not the case today. Data showing I just showed you is not the case today. There are government programs are helping with people. Lenders are helping with any small amount of distress. Homeowners right now, they will try to work out solutions program if they are behind on their mortgage. So lenders, they don't want people to walk away from their homes. They don't want the lenders out there, the mortgage holders, they're not in the business of foreclosing. All right, they want the homeowners to stay to a good financial position. At the end of the day, this video, my presentation is such that you have economics 101, the demand was still higher than supply. Economics 101, when demand is greater than supply, which is the case right now. Right now, with around nationwide, around 4 months supply of inventory, and the demand is still pretty high, not that high because of a high mortgage rate. With the mortgage rate, hopefully, if and when it decreases to below 6%, we'll see whether that could happen in 2025 or not. If that happens, it'll stimulate more demand. More people can qualify to buy homes. So a lot more people going to come off the sidelines to afford their monthly mortgage payment, which based on a lower mortgage rate. Right now, 6.8% mortgage rate. Right now, we're talking in October, 24th today, 2024, the Mortgage News Daily have a rate of like 6.8%, almost back to 7%. Right now, you could make the argument the last quarter of 2024, we could make the argument right now there's a frozen housing market, literally and figuratively speaking. But no housing crash for the past 13 years because data I just show you in the past 80 years, there's only one housing crash back in 2008, 2009. That's it. Every other year, housing prices have consistently grown. People locking in a real low mortgage rate. People have so much equity. No stress out there. Okay. Try to get that into your brain. All right. So that's my takeaway. All right. We'll see. Nobody have a crystal ball, but next year, right? Spring housing market 2025, if the mortgage rate comes at 6% or even low 6% or high 5% for 2025, you might expect a lot of people going to get off the sideline. You may going to see some frenzy. You may going to see some bidding war, multiple offers, and a lot of competition. People getting off the sideline, and housing prices will even go higher than we have been normally getting for the last few years. All right. So hopefully this high level historical data will refute any of those misconceptions, inaccuracies that come from those housing crash, doom porn out there that's been misinforming people for years now. So avoid those people. And they need a regular job, those housing crash bros. They need to get a real job because this monetizing their channel just to profit is a bad, unethical practice by those people out there. Right? So hopefully you receive a lot of value from this video. If you have, please like and subscribe to my channel. And also comment below what do you think of my real great concrete historical data that will refute any of those negative information about the housing market that you are seeing out there. Right? And also subscribe to my email, to my website below. Put your email into my database and you will receive a lot of great housing market updates, real estate investment news. You're becoming a free member in my network so you can get some real great daily information coming to your email inbox. So you become even more of an informed housing buyer, real estate investor, what have you. All right. Thank you so much. This is CYU. Thanks for watching. I'll see you on the next video very soon. Have a nice day. Bye-bye.